It's that time again. The annual conference of the American Society of Ag Consultants, otherwise known as ASAC, is going to be held in Fort Myers, Florida, this November 4th and 5th. Kurt Covington is one of 9 professionals who will address the conference. The other speakers who will cover a wide range of topics represent Florida Farm Bureau, Florida Citrus Commission, University of Tennessee Institute of Agriculture, National Ag Law Center, Risk Mitigators and Advisors, Tyler Associates, as well as the lead economist for dairy at CoBank, and myself, Chrissy Wozniak from North American Ag. The day and a half of presentations will be followed by ag tours on Tuesday afternoon at Echo Farms, one of my favorite places here in Fort Myers. Attendees will experience farming at its most creative, with unique demonstrations, plants, and techniques being used to help farmers and urban gardeners in developing countries. A second tour at Echo will showcase simple technologies that can improve food, water, and shelter for millions of people. A third tour of a hydroponic grower is also being planned. For more information and to register, visit www.agconsultants.org. That's www.agconsultants.org. See you there. The 2022 growing season has been a roller coaster, to say the least. But what if I told you that you could add another revenue stream for your farm? Harvest Hosts connects over 200,000 RVers to a network of thousands of farms, wineries, breweries, and small businesses. Hosts simply offer RVers a one-night stay on their farm, and in return, RVers patronize the host business. The program is a cost-free opportunity, and 100% of the money spent on site goes straight to the host. In 2021, members spent more than $40 million across host locations. If you don't sell produce or products on your farm, no problem. You can get creative with what you can offer travelers, create farm experiences, sell farm-branded swag, and even receive tips. Hosts can accept or deny stay requests, manage the number of RVs, and set blackout dates. No hookups or services are required to host. Visit harvesthosts.com/hosts. That's harvesthosts.com/hosts for more information and to apply to become a host today. Hi, and welcome to the North American Ag Spotlight. I'm Chrissy Wozniak. Today, we're talking to an ag economist from north of the border, looking for his insight on what the economic outlook is for 2022. He's vice president and chief economist at FCC Farm Credit Canada. From Quebec City, Canada, I'd like to welcome JP Gervais. Welcome, JP, and thank you so much for being here.
Well, it's my pleasure, really, to be a part of the podcast.
Thanks. And so can we start off by just telling me a little bit about your background and how you ended up in a career in agriculture?
Yeah, I think my passion for ag and food comes on my father's side. He was one of many siblings, and the only one, I believe, not directly involved in agriculture. So I have tons of uncles, aunts, and cousins that are either farming, involved on the input supplying side of the business, input manufacturing with the farm sector, and so forth. So I think if I trace that back to this, it explains a lot of why, as I was going through my degrees in economics, I was, anytime I had to pick a topic for a term paper or research or whatnot, I would just lean on my knowledge of the ag and farm sector and passion for food. So I think, and now here I am working for the largest lender entirely dedicated to ag and food. So I think it's really like the journey so far.
Yeah, that's great and really important. And the industry is very lucky to have you.
Well, I think, like I said, I believe working for FCC and the fact that we're entirely dedicated to ag and food, I think makes a ton of difference in the sense that we have tons of passionate people at FCC that are entirely dedicated to helping advancing the business of ag. And so it's when you put together a great cast of like-minded people with the same passion, I think it makes it's a little bit easier to make the dream come true, for sure.
Yeah, that's a good point. And the role of FCC is a really important one to Canadian farmers. Can you tell me a little bit about the ways that you do help them succeed?
Well, first and foremost, I mean, we are providing financial services to the farm sector, but not only at the farm level as well. We are focusing on those that are supporting farm operations by supplying inputs, manufacturing inputs. So, if you think of fertilizer, equipment, and so forth, and as well as supporting the businesses that are buying farm output. So if you're processing it or shipping it, distributing it, and so forth, I think those are the sort of the businesses that we help and support by providing some lending, obviously, just to make sure that businesses that have a desire to grow are able to do it financially. But we also have tons of other services that are dedicated to advancing the business of ag. So, for example, we have a farm management software that is gaining a lot more traction. We got a lot more farmers in Canada that are using our software, with the thought there being that, making sure that if we advance the skills when it comes to farm management, then we'll be able to advance the business of ag and make the farmers more successful in their business. And so it's this entirely broad suite of tools that we have to support farmers, not only in terms of financial needs, but as well as in terms of knowledge, and help them out in terms of farm management as well.
Oh, that's great. And we'll shift a little bit to the farmer now. Producers don't have any control over the price they set for their products. Of course, they have no control over the price of their inputs. So what are you seeing in 2022 in terms of how producers are managing these high inputs, high fuel costs, but also high commodity prices?
Yeah, no, this is a really great question, and that's a question I've been asked a lot lately, obviously, with all the different pressures. In my 25 years doing this, I've been with FCC 12 years, but prior to this, I was also doing research in economics or ag economics. And I don't think I've worked in an environment where so many different influences are all happening at the same time, right? So that makes the environment really complex for farming operations. And I've said this many times. I mean, farming is a sophisticated sector of the economy, very complex. But I think the stakes are really high when it comes to sophistication and complexity. So, and the reality is, short term, farming operations don't have a whole lot of ability to adjust and do different things, right? So I think the one thing at the farming level that is unique, if you compare farming to other sectors of the economy, is the long lags that exist between production decisions and marketing decisions, right? So if you think of crops, seeding and harvesting and marketing, if you think of livestock production as well, there are long lags. And those lags sometimes prevent businesses to adjust in the short term, right? So in the short term, I say more so than ever before, I do think with the high price of inputs, I think it's not just about looking at the production side of the business, but also the economic side of the business. So not only, for example, trying to maximize yields, but also making sure that if I apply more fertilizer, that there's economic value behind the decision. So I think in the short term, I think that's pretty much all that you can do as a farming operation in the current context. And it's a bit, I was going to say sad, not necessarily sad, but certainly daunting to think that, hey, now is not too early to think about next year. And that's really, I think, the uniqueness in terms of farming versus other sectors of the economy is you have to have this long-term planning ability here to make sure that now is the time to think about future decisions that I'll need to make on my farm, given that the really high inflationary environment that we have right now could actually last well into the next marketing year, not even this current marketing year that is just about to end, but really well into the next one and the one after that. So this is really about, making clear about your strategic plan and making sure that we're on the medium term and long term where you have options to adjust your production plans, that you do think about this as well and make sure that you have strong risk management, both financially and from a marketing standpoint. I think this is really on the medium term to long term that I think there's ability for farm operations to do just a little bit of their business plan and react to the current environment that we're in.
Yeah, those are some really great points. And how is the Ukraine situation affecting food security, not just here in North America, but across the globe?
Yeah, well, first, I mean, you do mention North America, and I think it is important to emphasize, right? In the United States and Canada, we are fortunate to be able to access and source secure food. But we do have segments of the population that are still food insecure at both sides of the border in Canada and the US. If I look at Canada, there are segments of the population that will be struggling even more so now, given the high food prices that we have. But from a global perspective, absolutely, I do think that, it's pretty obvious now that with Ukraine and Russia being very, very large producing countries when it comes to ag commodities, we've seen food prices rise, and we've seen as well other exporters that are not necessarily directly involved in the current war, but nonetheless taken actions to restrict their exports. Indonesia, for example, took some steps to limit the export to palm oil. Now, I think they walked that back and faced with a little bit of pressure from at the global level as well. But we've seen other suppliers making sure that India is another example, right? So we've seen other suppliers taking action to make sure that they secure their domestic supply before sort of encouraging their businesses to go in the world markets. And I think that's sort of creates an escalation when it comes to food security concerns. It's not just about the production that is not going to be there in Ukraine this marketing year, this next marketing year, and some of the trade flows that will be disrupted coming out of Russia because of the sanctions, but it's also about, all the other exporters. And I think, if you look at the US and Canada, I think we have a major role to play when it comes to food security. And hopefully, this year and the next and so forth, we'll be able to make up some of the gap in between supply and demand that exists at the global level.
Yeah, that's right. And one of the big problems this year has been feed prices. So do you think they've peaked now, or is there more to come?
Well, and this is a really interesting question. I wish, I could answer this, a couple of months from now, right? So after this marketing or after this production season, because in a couple of months, we're going to have a much better idea. I am afraid to say that I don't think they've peaked. I think I can certainly see some situations going into this summer that will likely drive prices a little bit higher. I truly hope that we're going to get, fingers crossed, a great production season. If you look at Canada last year, it was terrible. Out of the Canadian prairies, we have production down about, on average 40%. And so we need it for many different reasons. You touched on food security. That would help a whole lot if we had a good crop, on both sides of the border, alleviate some of the food security concerns at the world level. And not only that, we even prior to Ukraine, the war in Ukraine, we needed a good production. So because of all the uncertainty, and the one thing we can be sure of, and that's the one thing that I always like to point out, the one thing that we can be sure of, there's just no way to be sure of direction of the prices in the next couple of months. But the one thing that we can be sure of is the added volatility that we normally observe when we have stocks this low. And so I would expect that prices at some point in time, based on the news related to either the war, either the weather patterns or whatnot, that to see feed prices go up slightly. And I do think that farm operations, especially livestock operations, need to be thinking about that possibility throughout the summer and early in the next marketing year.
Right. And then hay acres have been trending downward over the last 2 decades. Weather, obviously, like as you said, has been a negative factor in the supply in the last year as well. But what's the outlook for hay as we're approaching first cut?
Well, the outlook's not too bad. If you look at, I think in the prairies, in the Canadian prairies, it's a tale of, starting from central Saskatchewan and east. I think the outlook's pretty good. You got some moisture, and I do think that we're going to have decent production. But west of central Saskatchewan, so western Saskatchewan and Alberta, there's still some very, very dry conditions, and I do think that there's going to be a challenge there. Now, on the central part of the country, eastern and central Canada, if you look at satellite maps, it looks like vegetation is slightly above average, which is by the end of May. So it looks to be like there might be some production support there just to fill in some of the gap in supplies that we've seen last year. The one thing, though, if you think of good production in Eastern and Central Canada, the transportation costs are going to be an issue, bringing some of the needs, so filling in some of the needs in Western Canada. But I do think that overall, it looks like to be a much better year this year than last year. That's for sure.
That's good. And do you think that a strong 2022 crop could put things back in line again?
I to some extent, right? So prior to the war, I would say yes, Now that we don't know exactly yet, production coming out of the Ukraine. We don't exactly know as well how shipments are going to be able to flow from Ukraine and Russia to other countries as well. I think at the end of the day, I think production out of Russia is going to get sold. It's a matter of determining where, and then the markets are going to sort out all this shuffling in markets and so forth. And I think that's going to be fine. But prior to the war, I would have definitely answered yes to that question. Now, I do think that we have to have really good production and maybe some more rationing in terms of high prices to slow down demand where it is needed and where it is possible to do so, and hopefully alleviate some of the food security concerns that are starting to develop all over the world, really. So I'm not so sure that a good crop in 2022 is going to solve all of the issues when it comes to bringing prices closer to their long-term average.
Yeah, that makes sense. And will the decision to extend the usage of E15 gasoline in the US, is that going to have an impact on Canadian corn prices?
I'm not so sure. Year to year, it's not unusual to see corn production in the US fluctuate by 500 million bushels, even up to 1 billion bushels. And so to the extent that E15 is just going to require a few more millions of bushels of corn, given all the issues that exist, and I'm no expert on the topic for sure, but just given all the issues that exist with distribution of corn or ethanol, E15 ethanol in the US, I'm just not sure that, from what I understand, that the impact is going to be that significant on the marketplace. Weather is going to have a much, much, much bigger impact, if you think of US and Canadian prices that are tied to US prices at the end of the day. So I would say not necessarily. I don't expect it to be a major factor in the next marketing year.
Okay. And then, as we all know, input prices have gone crazy through the winter and spring, in some places as much as 155%. Is there relief in sight?
There is relief. Again, so much relies on the size of the 22 crop, and we got potentially more more soybeans, just because in the U.S., just because of the demand for vegetable oil is absolutely so robust that I think the forecast right now from the USDA is that acres are shifting towards soybeans. I'm personally not necessarily so convinced that we're going to get this huge of a shift towards soybeans. So, I think from a feed price standpoint, we should get some relief, acknowledging as well that prices actually could climb higher in the short term, depending as well on how the conflict in between Russia and Ukraine evolves, as well as depending on the weather patterns for sure.
And will there be, in your opinion, a crop out there that's going to be more profitable than others this year? And why would you think so?
Yeah, well, if you look at our projections, so we run projections basically throughout the entire year in terms of expected profitability for the different crops, right? So if you look at Central Canada and corn and soybeans, the standard rotation, corn's definitely more profitable, even considering some of the very high prices that we face right now when it comes to fertilizers. But the profitability for corn in Central Canada is definitely higher than it is for soybeans. I think part of what is going on in the soybean market is that markets have sort of priced in already the increase in production coming in from the US, and we've seen prices of soybeans slow down a little bit lately. But I am very bullish for anything oil seeds, really. And just to that point, if you look at Western Canada and some of the projections that we have for expected profitability in the fall for the different crops, I think canola stand out really as the one crop that will be very highly profitable. The projections from Statistics Canada right now call for an increase in seeded acres of wheat and a decline in canola. Again, I'm not super convinced based on those profitability indicators that we've run for a number of months now that we're going to see such a shift in the marketplace. That I expect lots of acres of canola still. And some of the profitability as well that is coming back for pulses, right? So we've had horrible production in 2021 for pulses. If you think of lentils, peas, And so, where production was down more than 40% in the prairies. And so then you're looking at some of the markets that have started to reopen for pulses, and some of the pricing out there. I think profitability looks good as well. So, and we've invested tons on the Canadian prairies to develop processing, fractioning of peas, for example, and the overall processing capacity for pulses. And so there's a built up demand right there that I think is going to be really supportive of prices when it comes to pulses.
Well, that's good news. And we'll shift now over to livestock. Cattle prices, for example, in 2022 are forecasted to remain at or above 2021. And in Ontario, hog prices are projected to be significantly higher, but profitability is still likely to be the main issue in both. Do you agree with that?
Yeah, well, definitely. If you think of hogs, for example, right, if you look at prices, they're really similar to what it was in 2021. 2021 was a really good year when it comes to prices. I mean, gross receipts or gross income for hog producers were record high. And there was very, very good profit. It was good profitability in 2021. Now, 2022, if you look at pricing and if you look at future markets and make some, convert what the future prices in the US look like when converted into Canadian dollars and so forth, and make some assumptions about the exchange rate between the Canadian and US dollars. It looks as profitability is going to be positive for the summer months. I think we may run into a few issues towards the end of the year, but profitability would be a lot less, even though we have similar hog prices that are way above the 5-year average. So that's the good news. I mean, the not so good news on the other side of the coin is that on the feed side, I think it's really where profitability gets challenged. And I would say that, a similar argument applies as well to cattle markets. And so overall, I am fairly confident that we'll be able to navigate a profitable year. But this is definitely more challenging, for livestock operations and cattle and hogs for sure.
Good. And China's pork production is ramping up again, and Chinese beef imports are expected to increase for the third straight year. So how is that predicted to affect Canadians and the U.S. market?
Yeah, the relationship with China, the trade relationship with China is highly unpredictable. And now I think even more so given all of the politics with Russia and China and their relationship and so forth, right? The one thing that I am fairly convinced of is that China is still going to have a major impact in the global food and ag markets. And I have always said or made a point to say that it's not necessarily that it is important to ship what we produce to China. China is going to have an impact. And if they're demanding more because their economy is growing, or because they have a shortage, just like they experienced between 2018 and 2020 with African swine fever that decimated their pig population. And now they've been rebuilding, as you said, and it looks like 2022, they'll get close to where they were prior to the beginning of this African swine fever disease, but not necessarily all the way there. So they're still going to have demand for proteins. The economy over there is slowing down. And that's the one caveat there when you think of the role of China. Two caveats. One is the economy slowing down, which I could actually lower their demand for proteins. And so from a US and Canadian standpoint, looking at, the ability to supply that need, it might not be as strong as it was, in previous years. So that's one thing on top of the fact that they're rebuilding. So their production is going to go up. And yeah, I think that the ability to rebuild as well is function of some of the constraints that are emerging in China with regards, for example, some environmental considerations that, are in the way of, building like they would want, or building back hog operations the way that they would want. So I think this is all something to keep an eye on. I do think that for the foreseeable future, China is still going to have a major, major impact on ag commodity markets. But with the war in Ukraine and the relationship between China and Russia, I think this is also interesting to keep an eye on and see how this is going to evolve in the medium term here.
Yeah, good points. And the avian influenza has been hitting North America hard. What's your opinion on the outlook for poultry?
Yeah, I think, well, if you look at duck, if you look at from a consumer standpoint, if you look at prices that they could be faced at the retail level, just because of avian influenza, if you look at duck meat, turkey meat, those are where I think the from a proportionally, these sectors have been hit harder than, let's say the egg sector or the chicken sector. So I think this is definitely an area to consider. I think meat prices are going to be climbing for significantly, and they're already up significantly. When you look at egg and chicken prices, I think when I look at all those, I do think that what we're seeing in terms of prices in the supply chain that look like, anyway, some of the usual inflationary pressures that we're seeing for other types of proteins and so forth are not entirely different. So I wouldn't say that necessarily this will have a major impact at the consumption level. Now, at the production level, I do think that the compensation offered to producers will offset some of the losses. In Canada, most poultry operations, if you think turkey, eggs, and chicken are under supply management. So there is a pricing formula there that helps match the price that producers get for their production based off feed costs. And so I think from that standpoint, I think this system is really going to help and offset some of the losses that we've had because of avian flu.
Oh, that's good. And I know you touched on this before, but really when it comes down to it, what should farmers be doing right now to navigate these issues? And I know you said before, really start looking at 2023. Is that kind of the main message?
Yeah, absolutely. I think at the margin, I think the management skills, because we're done, depending on where you are in the country and so forth, but we're done now putting a very expensive crop, most expensive ever crop in the ground. So it's almost as if, you're moving from a poker table where, you're allowed to bid by $20 to a much higher stake type of poker table that the stakes are higher. We're putting a more expensive crop in the ground. So because of all of this, I think a couple of things need to happen. First of all, I think you need to sharpen your management skills. As I said, you need to have this short-term, medium-term, and long-term perspective, making sure that your actions on the farm are driven by economic considerations and what might have made sense in the past in terms of applying fertilizer or whatever else might not make as much sense today and in the next few months, just because we're faced with a totally different pricing environment. So that's short term. And in short term, I do think as well that we need to be thinking about risk management a great deal. So from a production standpoint, financial standpoint, I think, like I said, I do expect a lot more volatility, and volatility isn't always bad, by the way, right? Volatility does sometimes bring opportunities to lock in prices at a higher level than you normally do. So I think, from a standpoint, surround yourself. I always say, I think that the best advice is to be a CEO on your farm. And if you think of a CEO of any business, the CEO is not the person that is an expert at everything. A CEO surrounds himself or herself with good people, advisors, an expert on the financial side of the business, an expert on the human resource side of the business, an expert on the marketing side of the business. And I think, if we do have that mindset at the farm level to surround ourselves, yes, we do have, abilities and knowledge that are specific to our farm, but also acknowledge that, surrounding ourselves with the great partners from a financial standpoint, labor or whatever else, that you're involved with on the farm, I think makes a whole lot of sense. So be a CEO would be sort of the advice that summarizes everything that I would suggest, farmers need to take into account this year.
Yeah, that's great advice. Excellent advice. And like you said, that's the advice for every business right now. And I work a lot with and talk to a lot of manufacturers, and they've had their own host of supply chain issues, of course. But they've had an interesting kind of unpredictable pattern over the last 2 years of high demand. So what do you think about spending? Will farmers be spending money on equipment and improvements, or will they be waiting out the storm and keeping payments low?
I think there's definitely a sense of caution out there. I do think that if you look at, the couple of markets that are setting the tone when it comes to the outlook for farming, and one of which is the farmland market. And so when demand for farmland is very strong, I think that speaks to me to the positive outlook in the industry. And right now we do have demand for farmland that is very strong. Yes, there's a bit more caution. I think there's a few more businesses that are taking a second look at their financials, look at their books and say, well, okay, given what we have in the marketplace, maybe I need to be a little bit more caution here change or adjust some of the strategic plans I had to purchase new equipment and so forth. But overall, I think there's really a sense of optimism in the industry, and I think one of the bellwethers, so to speak, of that optimism is really the demand for farmland. And so we had very strong increases in farmland values in 2021. We're going to be shortly ourselves looking at the first 6 months of 2022. And I would expect that there's still going to be increases in the farmland market simply because the demand for farmland is very strong. So yes, there's a sense of caution. I do think it's a good thing. Businesses need to take second looks at a number of different things. But at the end of the day, I also see a lot of optimism in the industry for good reasons, right? If you think of Canada, I mean, our vision at FCC is serving the industry that feeds the world. And if you think of service, I don't think there's any greater calling than being of service and serving the industry that feeds the world at the times where there's global security issues. I think that's quite inspiring, and I think it fits the mindset of our customers as well, and the overall Canadian ag industry as well. Is that there is a major role here for Canadian farming operators and farms to actually solve and alleviate some of the major food security concerns that are currently developing on the world stage.
Yeah. And what's happening with interest rates in Canada right now?
Yeah, well, we just talked about farmland values, so I guess a good segue there, right? So we had the Bank of Canada decision on June 1st that lifted its key policy rate by 50 basis points, so 0.5%. That's the second consecutive increase of 50 basis points by the Bank of Canada. Overall, the Bank of Canada rate went up 1.25% since March. We think that we're going to see another 1% increase before the end of 2022, perhaps another 50 basis points increase in July, and two more smaller increases before the end of the year. So that would bring the overnight rate of the Bank of Canada at 2.5. I do think that if you look at the drivers of farmland values, right, it's farm income, which will be record high this year, given the high prices. On the gross income side, right, profitability, as we've discussed, is a different issue for sure. But overall, the gross income is going to be really strong, but interest rates are climbing. And I think this is going to slow down a little bit the demand for farmland. I don't think this is going to slow down farmland values, but I do think it will slow down the farmland demand for farmland. Because producers, have made lots of investments in recent years and now are looking at maybe higher interest expenses that will have an impact on their margins and their profitability. So I think from a financial risk standpoint, again, I would advise that any operation does like what all financial institutions like FCC are doing, which means stress test your operation, right? Run some scenarios, assume that interest rates are going up by 2%. What happens then? Assume that your yields are down 20%, so income's down, which means that maybe your ability to service some of the debt that you've taken on is not going to be as strong as it was in the past. I mean, just to have a really good understanding, what I mean by financial risk management is to have a really good understanding of what's the risk out there, what is your financial risk exposure. And if after you understand this, then maybe there is a few things that you can do in terms of locking in rates. Maybe, I think it's always great to have different types of loans on your book, in your farm. But, maybe it is time to take some of the interest rate risk off the table, part of it anyway, and lock in some rates for the long term, given that rates from an historical standpoint, interest rates remain very low from an historical standpoint, despite the increase that we just talked about.
Yeah, that makes sense. And then what about the consumer? When it comes to the drastic rise in cost of food and fuel, will there be relief for them? Or is this just kind of a new normal that everyone has to kind of maybe make different decisions or prepare in a different way?
Yeah, I do think that's a very good question. I do think that there will be relief. I did expect that by this time there would have been relief. Now, the one thing that nobody knew about was with the war in Ukraine, which really just, and then all the supply chains as well. I think I underestimated, if I look back at the last 12 months and some of the analysis that we've had, I think we underestimated the extent of the issues when it comes to global supply chains. And it would be easier for businesses involved in these supply chains to fix their capacity issues and absorb some of the higher demand as the economies were opening up again, absorb the higher demand that was coming from consumers. So I underestimated or I overestimated the ability of business to adjust. And so we're still stuck with some supply chain issues. There's a war in Ukraine. So I think we're looking at, unfortunately, this inflationary period for food to last a little longer. Now, I don't think this is sustainable right now to think that inflation is going to remain this high, because inflation is the rate of increase in prices. So I do think that prices are going to remain elevated, but might not grow at the same pace. So to say that inflation is going to come down still is consistent with my belief that food prices will remain elevated. I do think that consumers have to adjust their mindset and their budget as well, and thinking about food being a little bit more expensive than they're used to, for sure.
Yeah, that makes sense. And consumer consumption volumes, they're holding up despite the rate of increase, correct?
Yeah, absolutely. And it's quite fascinating, actually, that think that we domestically, I mean, certainly in Canada anyway, those are that's the market I'm looking at. I don't think we've seen some significant shifts. I mean, you could explain this from the fact that we were starting with a very low share of our disposable income that we were allocating to food purchases to begin with, right? We were not too long ago, prior to COVID, we were in that neighborhood of 10% that we were allocated in terms of overall food, 10% of disposable income that we were allocated to food purchases. Now that has jumped quite a bit, for sure, with the high inflation, but it's still very low on average. And it's, at the end of the day, I'm not so sure. Consumers are faced with high prices everywhere. So it's not just that, one particular protein will be faced with really high prices. It's pretty much across the board that we're seeing high prices, sometimes for different reasons, but it all seems to converge to a really high inflationary environment. And so, and then Canadians stand behind, I think, Canadian food producers, which I think is a good thing.
Yeah, that's great. So I have one last question for you. Why do you do this? Why are you so passionate about this? I know you touched on this before about your past, but what are you the most passionate about?
Yeah, first of all, I love economics. I think economics is so powerful in explaining a lot of things. I mean, my own personal mantra is I always like to say that what I do is making complex and boring easy and fun. And I do think that's what I'm passionate about, frankly. I have the chance at FCC of working with amazing entrepreneurs that are doing extremely wonderful things in their business. I've seen lots of growth in the industry in the last 12 years that I've been with FCC, and just being such a small part of that success in terms of making sure that we are conveying to our customers are the things that they should be keeping in mind, and just letting them do their thing, the amazing men and women that are behind Canadian farms and food processors and input suppliers. That I find that quite satisfying and quite inspiring, frankly. And I think we find it back to the passion I have for this industry. I think the ability to work with men and women that are producing our food and helping them out, figure out the complex things that they face in their daily business life, I think that to me is very inspiring.
Yeah, that's amazing. And like you said before, there's no greater thing than to serve.
Absolutely. Yeah.
That's awesome. So where can people find you, and where can they get help from FCC?
Yeah, so we have a fairly good presence on the web. So I think you'd start off with fcc.ca, which is our website. And you'll find on the website not only the lending services and products that we offer, but as well a pretty sophisticated and large section on knowledge. So we have economics in there, obviously, which is I oversee, but we have as well information with regards to farmland values. We have, if you're interested in succession planning, there are tons of different information that you can find on the website. And obviously, if you are looking to grow your business and need some financial advice and services, I think FCC is the place to look at. And you can start off from the website. We have a presence across the country, literally coast to coast. We have 100 offices, close to 100 offices that are located coast to coast across the country. And so there's a local presence as well, wherever you are. So I think, but starting from the website at fcc.ca would be the place to go.
Wonderful. Well, thank you so much for joining me today, JP. That was really great insight, a lot to digest as well.
It's been my pleasure. Thanks for the invite.
Yeah. And thanks to all who are watching or listening. If you want to learn more, all the links will be provided in the show notes. And don't forget to subscribe to North American Egg Spotlight on YouTube, Rumble, Telegram, or EggFuse channels. And the podcast is available on Spotify, Apple, Stitcher, Amazon, or wherever you listen to podcasts. And have a great day. Thanks so much for listening to today's Egg Spotlight episode, where we put the spotlight on people and companies doing great things for the agricultural industry. Don't forget to subscribe on Apple, Amazon, Spotify, Stitcher, or on your favorite podcasting platform, and give us a 5-star review. You can also follow us on YouTube and Rumble to see the video version of Ag Spotlight. Also, head on over to NorthAmericanAg.com to subscribe to our Industry Connect update newsletter. If you're interested in advertising opportunities, email us at connect@NorthAmericanAg.com. Thanks for listening. Our newest podcast by North American Ag is called What Color is Your Tractor? The stories behind the ag brands you love and the ag brands you love to hate. Hosted by me, Chrissy Wozniak. We take a deep dive into the companies that have built modern agriculture. Subscribe on your favorite podcasting platform. Go to whatcolorisyourtractor.com. Available on Apple, Amazon, Spotify, Stitcher, or wherever you listen to podcasts.